Hey traders, this is Jeff from zentrader.ca, and I wanted to get right to the NASDAQ chart. And what I think the best thing in the market to do is right now. Essentially, we've been kind of choppy recently, and the commodities markets have been a little bit scary. And I have been working on something for the last month or so to help refine my timing signal to get better exits and better entries. And I just wanted to, you're gonna laugh, but I drew this diagram. Okay, and this is really the best way for me to explain to you my thinking in terms of what I think is going on in the markets right now. So right now my timing signal is still green. However, I think that there's a lot of risk being in the markets long right now, buying momentum stocks. So let's go back to here. So let's say that the timing signal went green here, and let's just say that's at this point. So once it flips off, it's been very good to get into momentum stocks at that time, and then buy them. But then at some point, the markets start to peak. Okay, so let's just say this is the peak, and right around here would be the peak. Now, the problem with continuing to buy momentum stocks when the timing signal is green at the peak is that at some point the market starts to lose momentum, like it did here. So let's say that this is the top, and as the market starts to flip, at some point you want to stop buying momentum stocks. And so I've added I don't really know what you want to call it, a qualifier, another dimension to my timing signal to notify me when the momentum is starting to wane. And at that point, at this point, okay, when the market starts to roll over, you want to do a couple things. You want to get defensive. You want to take profits quickly. You want to raise your stops, and you want to stop purchasing new positions. Don't add to positions, because what happens is the market starts to roll over rather, and you start to give back some of the gains that you were making here. And depending on how long of a period that the market stays in the area that it's at right now, meaning right here it's choppy and there's really no risk. There's really no reward to be entering new momentum positions at that time, because you're just going to get whipsawed. You're going to enter positions and they're going to go down quickly. You're going to get scared, and then you're going to sell, and then the market's going to go up, and then you're going to get frustrated because you were in a position that you would have made money in. So where we're at now in the market is we are right here, where one of three things can happen. The market can rally and make a new high, and at this point is where I would suggest initiating new positions in the market. Another thing that can happen is that we can go sideways, which you don't want to be. You want to let your stops take you out of the current positions from this point on, and you don't want to be adding to new positions, because a sideways market is not a good market to be trading in. And then the third scenario that can happen is that the markets can go down, at which time my timing signal would turn bearish. I would say somewhere around here. Now, as I said, my timing signal is still positive, and I'm trying to avoid, buying, initiating new momentum positions when we're in from this stage on, which is, I think, I know where we're at right now. So I would just stay in cash and kind of let this market play out and see where we're going. So I hope this very simplistic diagram helped illustrate where I think that we're at right now in the markets.